The world's greatest geologist is on the verge of his next billion-dollar discovery. With looming shortages in copper, zinc, gold, and silver, this may be the best opportunity hard asset investors have ever faced. Learn more at futuremoneytrends.com/hardassets. Greetings and thank you for joining us at futuremoneytrends.com. I have an amazing interview for you right now, you guys. I'm talking about the world's, and he might not claim this, but I'm telling you, I have read everyone's work, including a good friend of mine, David Morgan, who is the silver guru. And I can tell you, and I'm sure David would agree, that the work that today's guest does on silver, precious metals, and energy is unique, it's powerful, it's extensive, and you just can't find it anywhere else. Now, if you've been to the website srsroccoreport.com, then you are familiar with my guest, Steve St. Angelo. Now, his work has been featured regularly on Zero Hedge, SGT Report, Gold Silver Worlds, Shift Plan, and of course my own site, futuremoneytrends.com. It is without a doubt the best research on the precious metals, and he has a unique analysis on it because he ties in energy with it, which most analysts and especially the mining companies don't. This is a must listen to for the next 15-20 minutes here. Steve, thank you so much for joining us.
Yeah, and thanks for the intro. Yeah, I do respect David Morgan's work. I tend to look at a lot more of the data. I'm one of those guys that I get excited about the information, especially when I see big changes. So I like to get the information out. I think manipulation is taking place. It's hard to prove it, but when you see the data and information and trends, they tend to prove what's happening. So I like to focus on that. But yeah, a lot going on, Dan. So let's get going.
Well, I'll tell you, when I talk to you, even before this call, I mean, you're just constantly firing off data, and of course, I'm going to have to buy some silver after I hang up because I'm sure I'll be pretty worked up here. Steve, you just put out an excellent article titled "Has the Global Run on Silver Begun? Shortages on the horizon." You know, I've seen so many of these type of reports over the years, not from you, but from a lot of experts. And my question to you is just straight out, what makes this time different? Why are you putting out an article that's saying and asking, has a global silver shortage begun?
Well, I think it's when we get into the specifics, but the overall reason is different than what happened in 2008 and even in 2013. 2008, we saw massive retail demand. There wasn't really a shortage in the industrial, or let's say wholesale bars, the 1,000 ounce, the large bars. There wasn't a shortage there, but there was a backup in getting retail, smaller coins and bars. 2013, demand picked up, and 14, demand picked up because the price fell. So Indians and different investors throughout the world were buying on the dips. And I imagine hedge funds too. Well, this year, ever since June, something's changed, Dan, and I think supply has fallen considerably, or let's say the supply has fallen a bit, more than I expected, but demand has picked up in the wholesale market, and we can get into that. But I think that's the big difference this year. We're seeing major wholesale demand, which we have never seen before.
Well, let's get right into that. So what has changed on the demand side? You just said wholesale is rising, so that's where it's coming from. Are we seeing any anomalies as far as this demand?
Yeah, in one of my articles, I stated how the U.S. silver imports are up 33% compared to last year. And this is the first quarter, January to March. And if we look at it, I think the U.S. imported over 1,500 metric tons compared to, I think, 1,130 last year. Well, if we look at Silver Eagle sales, if we look at industrial silver consumption or the COMEX, the market demand for silver in the United States has been flat or actually fell. So the U.S. market didn't need extra silver. So what's happened, I believe, and I'm hearing this in the background in the rumor mill, that there have been some large buyers accumulating silver bullion, and I would imagine that that's part of it. So we're not seeing demand being picked up by the market, but we're seeing large buyers coming in and stockpiling silver. And then we have India. India imported 3,000 metric tons of silver in just the first 4 months of the year. And if they continue on this pace, and if we start seeing more problems with this Greek exit, this no vote, they may even increase it. So they're on track to import 9,000. Now, that's up from last year's imports of 7,000. I mean, 9,000 is a lot of silver. This is a record for India. And then Keith Weiner, he wrote this article basically talking about the co-basis, which he tracks. It basically shows if there's a shortage in the market or if there's a tightness. And it fell in just the last week from like 9 basis points to 100. And so he believes there's a tightness. So that's another clue. And then we look at the Silver Eagle sales. In May, they were 2 million. The prices have kind of been drifting lower. Not really any excitement for investors then. And then the situation in Europe started to unfold. And then we start seeing the manipulation, or let's say the volatility in the bond prices. Well, I think this has really spooked a lot of investors, big investors too. And now the Silver Eagle sales jumped to 4.8 million in June, and they're already at 1.6 million in the first 6 days of July. And if we continue to see this selling, this demand for Silver Eagles, it could be over 5 million in July. So, and Gold Eagle sales are also high. So, and then the last thing, I'm looking at mine supply, and mine supply is actually down in the top 4 producers in the world. I think it's like 3 or 4%, maybe even 5% overall. And lastly, which I have in my report, we no longer have any net government sales from either Russia, China, or India. Last year, there was 0. And now in 2003, almost 89 million ounces came from those 3 different countries. They dumped silver on the market, or they added silver to the market. Well, we no longer have that supply. So with all those increased demand taking place, I think we are definitely now on the verge of a global silver run.
You know, now, so this hasn't affected the retail market, just to confirm. So if I call up APMEX or a bullion dealer or Miles Franklin, they're still not having any trouble getting silver, correct?
Yes, I don't believe there is trouble getting silver right now. Again, I think this is more of a wholesale kind of a tightness than a retail, but it could move into the retail. But I'm hearing that there's a lot of big buying taking place, and I've heard there are hedge funds coming in and buying big lots of Silver Eagles. So it makes sense for them with the price being so low. So right now, no, there is no shortage yet. However, I think if the situation continues to unfold in a negative fashion in Europe, I think we may see shortages. I'm not forecasting guaranteed shortages, but if the situation continues to escalate out of Europe, I think we will see in the future.
Now, Steve, I want to talk to you about the miners as well as the situation in Greece and as well as the supply side. I get into a little more in depth on that. Before I do, in your article, you mentioned a silver chart report where you predict that the silver market will become one of the world's most explosive markets. What can investors expect who purchase this report, which is $25, correct?
Yes, and what the report is, it's 48 charts just on silver, and many of them are from my work over the past 6 years, all updated, including many new ones no one has ever seen before. So it's broken down in 5 sections, and it gives either the new or experienced investor an overall look at the market. And I think the best way to look at things is a bird's eye view. Unfortunately, a lot of precious metal analysts and other analysts, they tend to specialize on one area. But when I look at a lot of areas and then tie in energy, you get to see connections and trends that you can't see if you just focus on certain areas like manipulation or supply or demand. When you put them all together, you get to see overall picture that becomes even more surprising. Like, I've got one chart, and I have seen the price of oil and energy and silver over the last 30, 40 years, but I wanted to know, what did it look like since 1900? So I created probably a chart that 99.9% of the precious metal investors have never seen before. I show a price of oil and silver from 1900 to 2014. And then, if you look at that chart, it will take all doubt out of your mind as to why the price of silver has traded and reacted a certain way. It has nothing to do with other factors or technical analysis or the cup and bowl formation. It has everything to do with energy. And so I think if people look at that report, they will see more clearly what is going to unfold in the future. And it is tied to energy. And while the price of oil has determined not only the price of silver, but the price of gold, they're trading currently still as a commodity. Their price based upon how much is consumed. Well, that's not their real mechanism. Precious metals, gold and silver's real mechanism is a high quality store of value, and we haven't seen that yet. But that's when we move from silver and gold being priced by energy to its store of value as a high quality, when we see the net present value of most paper assets imploding due to peak oil. And that's already starting to show itself now. So that is what we get to look forward to in the future.
Steve, for supply, I'm talking to you on a day where silver just breached down into the $14 range. What miners come to mind that are probably going to be in trouble here? And has this bear market killed off most of the exploration? Because, I follow the mining industry very closely, and I haven't exactly heard of any major discoveries or anything significant in a long time.
Yeah, it's the same thing with oil. They're not finding any good quality oil finds anymore. That's why they're out trying to drill oil in the Arctic. One of the worst places and the most fragile places to drill in the world is in the Arctic. So if we're not finding, if we had to go up there to try to get oil, we're not finding it elsewhere. The same thing with silver. Even though, like Tahoe Resources, their Escobal mine, that is an exception. I mean, that's 16 ounces per ton. That won't remain there. They're going to fall over the time, over their reserve base. They will fall. But the miners that are in the worst trouble right now, probably, if we see prices remain here for a while, are the high margin, low producers who produce a couple of million ounces, 1 or 2 a year. They have the highest cost. And like Great Panther, Arcana, Scorpio Mining, they're actual producers. I don't really focus on exploration, but those producers, they have a higher cost because they produce less. And then the other, like Tahoe, has the lowest cost because they produce 20 million ounces a year at 16 ounces a ton. So their break-even's much lower. It's like in the 11 range for me. So they could go down much further. But the other ones are breaking even about now. Well, they were at 17 in for my first quarter results. I don't know what they are now, but it could be a little bit lower. But I don't think much lower. So at $14, $14.80. It's tough for them. It really is. So I would say the higher margin producers are having the most trouble, and I believe most exploration companies will probably never become mines due to peak oil.
Interesting. Now, on the decline of precious metals in general, are we seeing a significant decline either from countries? Specifically, let's talk countries. Are we seeing a decline from countries? You talked about a significant increase in demand from countries like India. How about any significant or notable declines from the top countries that produce silver?
Yeah, and last year, and this is in one of my charts in the silver chart report. India produced 8 million ounces of silver last year, and they imported 288 million ounces. And that's when they imported 7,000 metric tons. Can you imagine if they import 9,000 metric tons? So the problem is the United States and India are the biggest importers in the world of silver. And I believe it was like 388 million ounces combined both of them imported, but overall production was like 40 million ounces. So these two countries import the most silver, but they don't have much domestic production. So they really need that silver from Mexico, Peru. But I'm going to put out an article on this, and I don't want to give out the exact specifics, but I will tell you I was quite surprised to see Peru's production fell considerably in May. It was actually up pretty good in January and February, but it fell precipitously in May. So overall, the top producers, the top 3, 4 producers in the world, production has declined about 4 or 5% in the first quarter, first 2, 3, 4 months. I don't know how that's going to unfold for the rest of the quarter and into the third quarter, but I believe they're having trouble, especially in South America and Mexico. It could be drought. I know Penasquito, their production had fallen from, I think, 7.5 million ounces in the first quarter of 2014 down to 4.8 million in the first quarter of this year. So their production fell considerably, and I'm not quite sure if that was due to drought yet, but if it is, I think we will. This is a major problem because it takes a lot of water to produce gold and silver. But lastly, interesting, Peru, even though Peru's silver production was down significantly in May, their gold production was up. So for some reason, Mexico and Peru, the two biggest players, saw significant declines. I think I even said it in my article. Matter of fact, I know I said it because I wrote the article. Mexico's production was down 12% in April, and I'm waiting to see what their May figures are. I want to see if it's carried through or if it was more of an anomaly. But I will do an update on the SRS Rocket Report.
Steve, the subscribers who listen to this and audience will have the advantage of whatever's going to happen with Greece tomorrow, whether they somehow kick the can down the road again, or if they go through with basically a default. They will know that whatever happens Wednesday is going to happen. We are doing that interview. We were doing this interview before then, but we are doing it on a day where, here we are on the verge of a systemic crisis in Europe, specifically in the currency markets, and gold and silver are trading down. They're looking pretty weak today. What are your thoughts on just today's trading?
It is frustrating to see that. It is frustrating to see how the precious metals, as well as commodities, fall in this fashion. Now, the difference I see, oil and precious and commodities, I can see them declining in a, let's say, a deflationary environment. There's less demand. That means the prices will fall, even if production continues to, let's say, grow a little bit. However, the precious metals, it's interesting to see how they've had such a huge spike down lower today with all this stuff happening. And it seems to me that the markets now are totally insane. To see the Nikkei and the Dow Jones, even though it's down a little bit today, it's 150 points at one time, it's still elevated up to levels that are completely unsustainable. And so, in 2009 or 2008, we had a huge sell-off of everything. We had oil go from $145 down to $35. We had silver and gold peak at $1,000, and silver was $20, and then silver fell to about $9, and gold fell to $700. Everything declined. The Dow Jones, everything did. Well, ever since QE3 came around, there's been a big disconnect at the end of 2012. The broader stock markets and the bonds received the liquidity, and then the precious metals and commodities were sold off. Well, that's not sustainable, even though we see what's happening now. Now, this Greek event can take place. I think the best thing for Greek and the people, for Greece and its people, is to have an exit of the European Union and to have some sort of relations with Russia. People who don't follow Paul Craig Roberts' work and understand even David Stockton, Russia isn't the villain here, even though they're made out to be. And it's in the best interest for the European countries to establish trade with Russia and to get out of the European Union, because it wasn't built for success. It was designed for failure. And so At some point in time, even though we can kick this can down the road, Dan, for a few more months, the best thing for the Greek people is to exit the European Union and to form some sort of relationship and trade with Russia, because they'll put a pipeline through there and they'll give them billions of dollars of aid, which is a much better deal than what they're getting now. And so I think as time goes by, I think we're going to see serious fireworks this fall. And I think, and I've said this before, if you don't have a good holding, holding of precious metals, when things get out of hand, I don't believe you'll be able to get the metal unless you at much higher prices. And even then, it may be hard to acquire.
Last question: Are you a buyer of the miners yet?
No, I am not. Matter of fact, I talk about the miners because I actually got into understanding the miners because I wanted to know what was the break-even, Dan. And I could not get it from the cash cost metric that the industry puts out. It's very underreported. They actually deduct the byproduct credits, which, according to my analysis, is like 35 to 40% of their revenue. But if you deduct that much of your revenue, you can make your costs very low. Unfortunately, the miners need that byproduct revenue to fortify the balance sheet. So I wanted to find out what was their real or a much more realistic break even. However, to understand that, I do know what miners are going to be much stronger and the ones that will prosper in the future. And so I will be putting out a report on the top miners I think will be the most successful to invest in. And when I finally see these markets turn around, that's when it'll be time to invest in the miners.
Well, do us a favor. I'd love to have you back on the show when you do that report, and I'd love to offer it up to our subscribers. Maybe we can do a joint venture on that.
Okay, and I will say this. I will say the best thing to do is to be in the producers. If you want to speculate on some of the more higher quality, let's say, explorers, there's nothing wrong with that. But I think the producers are the best place to be, and the ones that are the lowest cost. Hecla, who states they have a low cash cost, they do that because 65% of their byproduct revenue, their revenue is from byproduct base metal and gold sales. But they are not a low-cost producer. They are a mid to higher cost producer. So they you have to really know what the low cost producer is, and that's what I tried to find out in the report.
Steve St. Angelo, thank you so much for your time. I will have your domain, and please, in the YouTube video of this and the iTunes account, but please, everybody go to srsrocco.com and buy this $25 report, because I think that we're going into some very volatile times in this world right now, and just like Steve had said, the fall we might see fireworks. Remember Bear Stearns? It happened months and months before Lehman Brothers. Greece, this whole thing that we're seeing right now, this might just be the pre-crisis show before we see a real crisis later this year. Steve, again, thank you so much for your time. I appreciate all the research you do, and interviewing guys like you makes me have the best job in the world.
Well, and thank you, Dan. And let me end on one thing, just to make sure that it is the SRS Rocco report. And Rocco is my middle name, believe it or not. So it is the SRS Rocco report. And I wanted to add to what you said, because you said it correctly, and I didn't know this. Everyone knows Kyle Bass. Everyone knows Kyle Bass made a fortune betting against the subprime market. What I didn't know, which I found through a friend of mine from this book called The Big Short, is him and his associates, they went in early. They made that trade early on, and from what I understand, as the years went on, they were ridiculed. They took a lot of heat. Kyle Bass took a lot of heat for his subprime trade, his bearish subprime trade. Well, this is the same thing that's happening to the really hardcore silver and precious metal analyst. I get a lot of heat, especially on days like today. But the thing is, I realize, just like Kyle Bass, you have to wait it out. He made $600 million of bet against the subprime market, and it didn't bother him if it took another year. So this is what the precious metals investors have to understand. fundamentals haven't changed; they just have gotten better. So even though we see this craziness happening in the markets, you have to focus on the fundamentals, and you have to take a stand.
All right, sir. Appreciate your time. Thank you so much.
All right. Thanks again, Dan.